All right, our next guest has just been ranked one of the best on the street for his analysis of the financial sector. That's according to a new survey just published in the Wall Street Journal. Matt Albrecht is an equity analyst at S&P. Hey, Matt, first of all, congratulations on being named one of the best analysts on the street. Cheryl and I were talking about that. Was that just a matter of seeing this coming and saying, hey, we're bearish going forward in 2008 in financials?
I think so. I think it was just a factor of recognizing kind of what was coming through the market late in 2007, early in 2008, and reacting appropriately and deciding that a lot of these stocks that had which stocks had the most exposure, which companies, and really which ones to avoid and which ones really were more immune but still might feel some of the pain.
One of the reasons that you got this kind of these kudos from the Journal basically is because you were so bearish on the financials and said get out while the getting's good, which was spring of last year. Now what do you say going forward, because you don't seem too hot on the investment bank names like Goldman and Morgan. What's going on there, and will you change your mind at some point about these names?
Well, at this point, I think I'm cautiously optimistic. I think with all the government action pushing liquidity into the market and their stress test to say, in this scenario, these are the losses we can expect, and the ability of these companies to raise capital as easy as it's been, I think that's a sign that there's some stability there, and we've taken some of the nationalization concerns regarding some of the financial institutions off the table. But at the same time, we don't know what equilibrium is going to look like going forward. A lot of these markets they really prospered on in 2007 and 2006 aren't there anymore, and we have to really evaluate what their earnings models are going to be going forward. And I don't think we're at a point yet where I'm comfortable stepping in and being aggressive with these names. Right now, I'm letting the situation kind of shake itself out.
Matt, real quick, address the issue about the investment banks that took TARP money, therefore they can't really pay their top guys the money that they would normally be making in a good year. Over the weekend, I was with some people who said Goldman Sachs is losing people left and right. Major bankers at Goldman are brain drained. They're leaving, they're starting their own shop, or they're going to BlackRock, et cetera. Do I invest in a Goldman or any of the other investment banks that took TARP money?
I think longer term, there are certainly opportunities here. I think in the near term, it's certainly a concern. We've seen Morgan Stanley take steps to raise base pay, but that's likely, coincident with lower bonuses and stock grants, things of that nature. So they're doing what they can to retain talent, but it's certainly a concern at this point. Although I think in the long term, when you consider the number of their competitors have been removed from the market, their remaining strength in the markets that they're in, and the talent that they do retain, I think there are opportunities here. I think it's just a matter of finding out, in the next 6 months to a year, how do things shake out. What do these markets look like that they're participating in?
We're going to leave it there. Dick Beauvais, Matt Albrecht. Matt, congratulations to you, sir. Nice little mention in the Journal today.
Thanks.
All right, coming up, oil trading lower. Why are